Hello everyone and welcome to my channel. Today I want to talk to you guys about building a portfolio and how I structure my portfolio. You can structure a portfolio so many different ways, and I'm going to tell you guys how I structure my portfolio. I think this is the best way because I do it myself. However, there's a million different ways to do it, so everyone you ask has their own opinion, but this portfolio is recommended by 4 out of 5 investors. It's a little dentist joke for you guys. Have you ever seen toothpaste commercials? Anyways, moving on. So how did I build my portfolio? I bought a few stocks, and then I decided I want to buy a stock that I really liked and a stock that I felt really comfortable with. I also wanted a dividend stock, but I didn't really care about the dividend that much. A little bit was okay as long as it had some dividend. I more cared about the company and the growth. You can build a growth portfolio, as in you just kind of care about growing companies and stuff like that. Or you can kind of go for like a dividend portfolio, or you can go for a diversified portfolio. There are many different ways you can build a portfolio. I kind of go for growth, dividends, and I diverse myself a little bit, so that's kind of why I'm putting them up there. There's so many different ways you can really build a portfolio though, like I said. So the first stock that is my largest holding, and will probably be my largest holding for a very long time, is Apple. Apple is the company that I wanted to center my portfolio around. Apple. So Apple does pay a dividend. It is very, very sad though. So I don't get very much from dividends. However, it does pay a dividends. So one of the very first stocks I picked early on in my investing career were Apple. And to be honest, the stock has done pretty well for me. So I don't plan on selling it anytime soon. So I center my portfolio around Apple. Percentage wise, I probably like to keep Apple at around, I'd say, 55% of my portfolio, somewhere around that. I didn't actually calculate all the numbers, but somewhere around 55% of my portfolio is invested in just Apple. So if the stock takes a dive, I'm really going to feel it. Or if it goes up, my account's really going to look pretty. Anyways, moving on. The other stock that I like to center my portfolio on, I recently added this stock at the end of last year, and that stock is Disney. Disney is my second largest holding, and it is definitely not as big as Apple. It is more a probably 20% holding. I'm not counting cash in this because cash is about 30% of my portfolio at most times. I like to keep it at 30%. Depending if the market is down, I can buy more. And if the market's up, my cash is more heavy. So I didn't mention that. This isn't going into my percents either. It's more of a percent of my whole portfolio as a whole that I like to add the cash to. So I like around 30%, so I can buy if the market is down. So around 30% cash. But this is not going to add into this. This is just my two biggest investments, is Apple being 55 and Disney being 20%. So that's kind of my two biggest investments. And they're both dividend stocks. They don't pay very high dividends. I might be looking to acquire dividend stocks more often, but to be honest, I'm not really trying to get that many dividend stocks right now because I am a young investor and I am more interested in growth rather than dividends. Other stocks I have, I'm not going to name all the stocks I have, but if you want to add a third stock, I think you should definitely add a third stock, and I do have a third stock. I'm not going to name all my stocks because maybe I'd like to go over all my stocks in another video with you guys. So I'm just going to give you guys two of my stocks, and then I'll talk about my stocks, my personal stocks, in another video. So another stock, so say you buy stock C over here. So I have 55% in Apple, 20% in Disney. This would probably be around a 10% holding. So now we have about an 85% stock portfolio. So that's kind of how I like to structure it. Then I like more little holdings over here, like a little, say, 5% here. So what's that at? That's at 75, 85, 90. like maybe a little, and this is going to be E, so this is going to be stock E. Maybe this is going to be a 3% holding, and then this is going to be stock F, and say this is probably going to be maybe around a 2% holding, and then I'll probably buy another stock here, and maybe around another 2%. Say that's stock G. So this is kind of how I like to structure my portfolio. I like to have one big stock, preferably a dividend stock. I picked Apple because I wanted more growth, but I did want a little bit of dividends, so I get a little bit of dividends from Apple that I can reinvest every single 3 months, which is quite nice. So I like that. And also Disney, I sold off a little bit of my stocks that I didn't really like when I bought Disney, and I originally made a larger holding in Disney. However, I sold off half of my shares because I felt like the stock was underperforming a little bit, and I do like the company and I do see them as a long-term game. However, I wanted to reinvest that other half of Disney elsewhere, so this percent definitely is, it went down. That's why it's only around the 20% holding. Sometimes I would like these to be a little more. However, I find my Apple holding does tend to continue to go up in percent. I say it's 55% because I like it to be just over half. It might be closer to 60 in all actuality. I'd actually have to calculate it myself. But this is kind of how I like to structure my portfolio. I like my main stock to be a dividend stock and a good stock, and a stock that I firmly believe in. And Apple is a stock I firmly believe in, and a stock that I absolutely adore. Disney is a stock I do like as well. I like the company more than I like the stock. The stock is, in my opinion, highly undervalued and gets kind of pushed around in the stock market. So I have a 20% holding in Disney. Preferably, if you get a second big holding, you should pay a dividend stock. Again, portfolios matter on your age too. Like I said, I'm a young investor, so growth and a little bit of dividends works for me. However, if you're maybe older, possibly in your 40s, 50s, 60s, you might want to look more into dividends than growth, especially when you're starting to get 60 and later. I would look solely into dividends and only a little bit of growth, because again, if you're holding the stock for 50 years, chances are, if it's a decent company, you're going to make a lot of money. However, if you're only going to hold a stock for 5 to 10 years, maybe dividends is where you want to be. Again, everyone is different, so this is just an outline of how I have mine. Again, big holding, pretty big holding, and then I have a bunch of smaller holdings. I still like a fairly big holding at around 10%. I will say that these stocks, maybe like G, F, those are more speculative stocks. I do have a few speculative stocks in my portfolio. Some of them have worked out quite nicely for me, and some of them have not worked out quite nicely for me. So, however, though, if I lose, only maybe a 500, 1,000, or some low percent, like some low amount of money like that, it doesn't hurt me that much because sometimes they work out really well. However, I'm starting to get away from speculative stocks because I'm starting to think that they're mostly garbage, and it's pretty rare to find a winner. So I don't really like speculative stocks anymore. I'm starting to restructure my portfolio personally to more matter into companies that people have heard of and not companies you have to explain to people all the time. It gets a little annoying and whatnot. So guys, this is how I built my portfolio. This is, in my opinion, the best way to build a portfolio, to have one big holding and then center everything else kind of around your holding. And for the most part, they are all in different sectors. Not all of them. My more speculative stocks are in kind of the healthcare units, and then so I have this one more in technology and this one more in entertainment, and then my other stocks all are very different, and I even have a little bit in, like, say, cannabis, but that's more of a speculative stock as well, and I don't really like to hold those stocks long term. I should add that a lot of these smaller positions, in my opinion, are not long-term stocks unless I start to make a small initial position into a stock I really like, and then starts to build into my core portfolio. Say maybe like a stock like that's 10%, maybe I sell a stock like this and I start reinvesting into this, or I keep some of my cash and I add my cash into a stock like this, or a stock like Apple if it goes down, or a stock like Disney if I see it's going to take off. So I like to have cash so I can always invest in where I see fit. If my new stock is looking like it's going lower and I really believe in the company, you best believe my cash is going there. Or if Apple takes a nice dip, I'm going to buy some stock or at least some options on Apple. And if Disney goes lower, Disney's really been stagnant since I bought it. It's gone up a bit, but it's only gone up maybe 10% since I bought it. So I've been hovering around the 10% mark on Disney for a very long time. So I probably won't be adding any Disney anytime soon. I'm hoping the stock may go for a run, and we'll see what happens. But these are more of the stocks I'm kind of focusing on right now, and maybe adding a few more stocks to my portfolio. And also, guys, I don't think you should have really more than 10 stocks. 10 stocks, in my opinion, is probably the max amount of stocks you want to have. Unless you're maybe going more dividend heavy, then I would say you can add more stocks. However, still be careful because you only have so much time in the day. There's only so much time you have to manage and look at your stocks. And if you want to be an active investor, you should probably look at your stocks and news on a day-to-day basis, or at least every few days, at least once a week. You got to check the market if you're an active investor. Or you want to buy a mutual fund or have someone else do it for you, then that's okay too. But if you want to be an active investor, you've got to monitor this stuff all the time, guys. So hopefully you like this video. If you did like this video, give this video a giant thumbs up. That would be greatly appreciated. And please do subscribe. I would also really appreciate that as well. Please do comment down below your thoughts and theories. What do you think of how I built my portfolio? Again, I will tell you guys more in detail my stocks later on. As of right now, I'm just going to give you guys a little sneak peek into my portfolio. I want to do another video on my full portfolio. So, yeah, guys, tell me how you structure your portfolio. Do you like the way I structured mine? Or do you like the way you structured yours better? Or do you like the way someone else structured their portfolio better? My personal favorite person who structured their portfolio is Warren Buffett, because that guy's a G and he's friggin' $85 billion richer than me. So, yeah, I wish I had his portfolio is basically what I'm saying. Anyways, guys, comment down below. Also, if you want to see me review a stock, comment down below the stock you would like to see me review, and I'll more than likely review that stock. I hope you enjoyed this video. Until next time, see you later.